Afternoon, everyone. Today we'll discuss the content of Module 2, Income Taxation for the subject BA 203. So to begin with, we'll have to check on what are the lessons in Module 2 for Income Taxation. So we have Lesson 3. We will be dealing with the usage and identification of the different kinds of income tax EBIR forms. And for Lesson 4, uh, we will be having the actual filling up and documentary requirements of the income tax EBIR forms. So to start, Lesson 1, the usage and identification of the different kinds of income tax EBIR forms. We start with our motivation activity, which is a word navigator challenge, which widens our horizon by understanding more vocabularies about tax or taxation. So the direction for this activity is find the match of the following words below with their corresponding definitions. So we have 6 words to widen our vocabulary on income taxation. We have A, taxable year. We have B, rank and file employees. We have C, statutory minimum wage. D, withholding agent. E, fiduciary. And F, fiscal year. So the definitions that we will be matching with those words are refers to mean an accounting period of 12 months ending on the last day of any month other than December. Second choice is refers to mean the calendar year or the fiscal year ending upon which the basis the net income is computed. The third definition is refers to means any person required to deduct and withhold any tax under the provisions of Section 57 of the tax code. And we have fourth refers to mean a guardian, trustee, executor, administrator, receiver, conserv conservator, any person acting in any fiduciary capacity for any person. We have fifth refers to mean any employees who are holding either managerial nor supervisory position as defined under existing provisions of the Labor Code of the Philippines. We have last definition is refer to the rate fixed by the Regional Tripartite Wage and Productivity Board as defined by the Bureau of Labor and Employment Statistics and the Department of Labor and Employment. So we have to match these definitions with the 6 words from A to F. So taxable year, the answer for that is refers to means the calendar year, refers to means the first definition, So taxable year is referring to accounting period of 12 months ending at the last day of any month other than December. We have 5, B, rank and file employee. This means referring to all employees who are holding neither managerial nor supervisory position as defined under existing provisions of the Labor Code of the Philippines. We have C, statutory minimum wage. This refers to rate fixed by the Regional Tripartite Wage and Productivity Board as defined by the Bureau of Labor and Employment Statistics and Department of Labor and Employment. And fourth is withholding agent. This refers to a guardian, trustee, executor, administrator, receiver, conservator, or any person acting in any fiduciary capacity for any person. We have also fiduciary. Fiduciary means refers to means any person required to deduct and withhold just a moment. Fiscal year, the last one, this is referring to the calendar year of the fiscal year ending such which the basis of the net income the basis of the net income is computed. So that's fiscal year, mean the calendar year from January to December. So wherein this is the basis for the net income computation. Fiduciary, this means to refer up any person required to deduct and withhold any tax under the provision of Section 57. So that's what fiduciary means. Fiduciary means. So to start out with our discussion today, we start with the topic returns and payments of tax for individual requirements. The source for this is www.bir.gov.ph. So /index.php/tax code.html number sign title 2. The following individuals. So to start, the following individuals are required to file an income tax return. Letter A, every Filipino citizen residing in the Philippines. Letter B, every Filipino citizen residing outside the Philippines on his income from sources within the Philippines. C, every alien residing in the Philippines on income derived from sources within the Philippines. And lastly, individuals who are required to file income tax, every non-resident alien engaged in trade or business or in the exercise of profession inside the Philippines. The following individuals listed shall not be required to file an income tax return. Who are them? An individual whose taxable income does not exceed 250,000 pesos under Section 24. This is belonging to the minimum wage earning group. Letter B, an individual with respect to pure compensation income as defined in Section 32 derived from sources within the Philippines, the income tax on which has been correctly withheld under the provisions of Section 79 of this code. However, an individual deriving compensation concurrently from 2 to more employers at any time during the taxable years shall file an income tax. Therefore, to summarize, an individual having pure compensation wherein their tax are withheld by the one employer alone is exempted from filing his own personal or her own personal income tax. However, if this individual have multiple employer in each concurrent 2 or more employers in a concurrent year, this individual needs to file his or her personal income tax. Letter C, an individual whose sole income has been subjected to final withholding tax pursuant to Section 57 of this code, such general professional partnership or exercise of profession. So those who are with final withholding tax at the end of the year will be exempted from having the income tax returns on either quarterly or annually because they are subjected to final withholding tax and already. And D, a minimum wage earner, an individual who is exempt from income tax pursuant with the provision of this code and other laws, general or special. And to proceed, the income tax return or ITR contains a maximum of 4 pages in paper form or electronic form and shall only contain the following things. So the following things that can be found on an ITR or income tax return. A, we have personal profile and information. B, total gross sales, receipts or income from compensation for services rendered, conduct of trade or business, or the exercise of profession, except income subject to final tax. Letter C, allowable deductions under this code. Letter D, taxable income as defined in Section 31 of this code. And E, income tax due and payable. Where to file? Except in cases where the commissioner otherwise permits, the return shall be filed in an authorized agent bank or AABs, revenue district officer, collection agent, or duly authorized treasurer of the city or municipality in which such person has his legal residence or principal place of business in the Philippines, or if there is no legal residence or place of business in the Philippines, with the office of the BIR Commissioner. So, to sum up, we go with our authorized agent banks, our revenue district officer or collection agent, and pay to the duly authorized treasurer of the city or the municipality. When to file? Number 1, the return of any individual specified above shall be filed on or before the 15th day of April of each year. This will cover income from the preceding taxable year. So the preceding taxable year is a year to come. So number 2, individuals subject to tax on capital gains. So once again, number 2, preceding year is the year to come. If today is 2021 or the year 2021, you file your tax on April 15th, declaring your entire or forecasting your entire gross sales for the whole year of 2021. So second is individual subject to tax on capital gains. Letter A, from the sale of exchange of shares of stocks not traded through local stock exchange shall file a return within 30 days after each transaction and a final consolidated return on or before the 15th of April of each year covering all stocks transactions of the preceding taxable year. Letter B, from the sale or disposition of real property shall file a return within 30 days following each sale and other disposition. So the first one is on capital gains, which is one of the example stocks trade or investment trading, which will be reported 30 days after each transaction. And the second one is sale or disposition of real properties, that will be the same. The income tax will be filed 30 days following each sale or other disposition. For husband and wife, married individuals, either citizens, resident or non-resident aliens who do not derive income purely from compensation, shall file a return for the taxable year to include the income of both spouses. But where it is impractical for the spouse to file one return only, each of them may file a separate return of income, but the returns so filed shall be consolidated by the Bureau for the purpose of verification. So return of parent to include income of children. So the income of unmarried minors derived from properly received from a living parent shall be included in the return of the parent, except when the donor's tax has been paid on such property and when the transfer of such property is exempt from donor's tax. So the income that is to be included, therefore, to summarize, the income should be included in the return of the parent. This is pertaining to the income of unmarried minors from properly receiving which is coming from the property of their living parents. So except of course if the property is exempted from donor's tax, and when the parent have paid the donor's tax, that means to say the property have been properly donated from parent to child already. So there is no need to include the income on the parent's income tax return. So persons under disability. If a taxpayer is unable to make his own return, the return may be made by his duly authorized agent or representative, or by guardian or other person charged with the care of his person or property, the principal and his representative or guardian assuming the responsibility of making the return and incurring penalties provided for erroneous, false, or fraudulent returns. So, the person with disability, therefore, can have a duly authorized agent or representative or guardian who will be the one who will be shouldering any penalties incurred if the filing is erroneous, false, or fraudulent. So the representative will have all the responsibility, or the guardian will be assuming the responsibility of making the returns error-free and correct and on time. Signature presumed correct. The fact that an individual name is signed to a filed return shall be prima facie evidence for all purposes that the return was actually signed by him. So, yeah. Substituted filing of income tax return by employees receiving purely compensation income. So, individual taxpayers receiving purely compensation income from only one employer in the Philippines for the calendar year from January to December, the income tax of which has been withheld correctly by the said employer, tax dues will be equal to tax withheld. So, this individual shall not be required to file individual personal annual income tax return. So the usage and identification of the different kinds of income tax EBR forms. So we have six most commonly used EBIR or electronic BIR forms, and the purpose and usage of these commonly used forms. We have 1902. This is for application for registration for individuals earning purely compensation income from local and alien employee. So this application form nila siya for registration if you will be earning purely compensation income as a local employee or alien means foreigner employee. 1901. This is a application form for registration for self-employed. Can be a single proprietor or a professional, mixed income individuals, non-resident alien engaged in trade business, estate, and trust. And we have 1701Q. This form, the purpose for this is for quarterly income tax return for individuals, estates, and trust. We have 1701A. This form is an annual income tax return form for the purpose of for individuals who are earning income purely from business profession, those under the graduated income tax rates. This is the tabular or the table percentage tax rates with OSD or optional standard deduction as mode of deduction, or those who opted to avail of the 8% flat income tax rate. So we have two choices for these individuals who are earning purely from business or professions. And they file their tax yearly or annually. And we have 1701. The purpose of this form is this is also for annual income tax return for individuals, including mixed income earner, estate, and trust. So we have. So what's the difference between 1701A and 1701? So 1701 is primarily focused on mixed income earners, while 1701A is for those who are earning purely from business or profession. We have two choices in 1701A, and for mixed earners as well. You have two choices, either the OSD, standard deduction, optional standard deduction mode, and 8%. Oh no, the options are either percentage tax or graduated income tax from tax table, or the availment of the 8% flat income tax rate. So we have 1700. The purpose for this is annual income tax return for individuals earning purely compensation income, including non-business, non-profession related income. Compensation income, 1700. This is another form for annual income tax return for individuals that are not engaged in business and not engaged in profession or practice of profession. Their related income is pure compensation. So we have BIR form number 1902 on the highlights. Applications, once again, this form is used to apply for registration for individual earning purely compensation income. The description is this form is to be accomplished by an old or new employee, whether resident citizen or non-resident citizens earning purely compensation income, to be filed with the regional district office having jurisdiction over the taxpayer's residence or place of employment. The date of filing is to be filed within 10 days from the date of employment, or before the payment of any tax due, or before filing of a return or declaration is required. So next form is BIR form 1901, otherwise with the purpose of applying for registration for self-employed. This is for single proprietor professionals, mixed income individuals, non-resident alien engaged in trade, business, state, and trust. The description for 1901 form is this form is to be accomplished by self-employed or mixed income individuals, estate trust, doing just starting a business or opening a new branch for registration. This is to be filed with the RDO Regional District Office having jurisdiction over the head office or branch office. When to file, the filing date is on or before the commencement or the beginning of the new business, or before payment of any tax due. BIR form number 1701Q. This is Q means quarterly income tax return for individual estates and trusts. So when we say quarterly, every 4 months. So we divide the 12 months of the year by 4. We pay 3 times in every year. So description, 1701Q, this return shall be filed in triplicate by the following individuals. 1. A resident citizen engaged in trade, business, or practice of profession within and without the Philippines. 2. A resident alien or foreigner, non-resident citizen, or non-resident foreigner or alien individual engaged in trade, business, or practice of profession within the Philippines. Number 3, a trustee of a trust, guardian of a minor, executor, administrator of an estate, or any person acting in any fiduciary capacity for any person where such trust, estate, minor, or person is engaged in trade or business. The date of filing, okay, so since this is quarterly, we pay 3 times in a year. So 3 times because when we say quarterly, every four months. So the first payment is the first quarter is on or before May 15 of the current taxable year. Second quarter is on or before August 15 of the current taxable year. Third quarter is on or before November 15 of the current taxable year. So that's the third quarter payment. They are Form 1701A, annual income tax return for individual earnings, income purely from business or profession. Those under the graduated income tax rates or the tax table rates with optional standard deduction OSD as mode of deduction, or those who have opted to avail of the 8% flat income tax rate. Description: the return 1701A shall be filed by individuals earning income purely from trade or business or from the practice of profession. A resident citizen with or without the Philippines. 2. The resident alien, non-resident citizen, or non-resident alien within the Philippines. The return shall only be used by said individuals as follows. Letter A. Those subject to graduated income tax rates and availed of the optional standard deduction or OSD as method of deduction, regardless of the amount of sales, receipts, and other non-operating income. Letter B. Those who availed of the 8% flat income tax rate whose sales, receipts, and other non-operating income do not exceed 3 million annually. So we have the filing date for 1701A. The filing date this return or 1701A is filed on or before April 15 of each year, covering income from the preceding taxable year. So we have BIR form 1701 means annual income tax return for individuals including mixed income earner. So 1701 description this form shall be filed by individuals who are engaged in trade, business, or the practice of profession, including those with mixed income, those engaged in trade and business or profession who are also earning compensation income in accordance to Section 51 of the Code as amended. The annual income tax return summarizes all the transactions covering the calendar year of the taxpayer. This return shall be filed by the following individuals regardless of the amount of gross income. Number 1, resident citizen engaged in trade, business, or practice of profession within or without the Philippines. Number 2, a resident alien, non-resident citizen, or non-resident alien individual engaged in trade, business, or practice of profession within the Philippines. Number 3, a trustee of trust, guardian of a minor, executor, administrator of a state, or any person acting in any fiduciary capacity for any person where such trust, estate, minor, or person is engaged in trade or business. Number 4, an individual engaged in trade or business or in exercise of profession and receiving compensation income. So the filing date, this return is filed on or before 15th of each year, covering income from the preceding year. So we have the last type of form, 1700. So this is for annual income tax return for individual earning purely compensation income, including non-business and non-professions. 1700 are individuals earning from pure compensation with no engagement in any business or practice of profession. So this return shall be filed by every resident citizen deriving compensation income from all sources, or resident alien and non-resident citizen with respect to to compensation income from within the Philippines, except the following. So we have exemptions. Number 1, individual whose taxable income does not exceed 250,000 pesos annually. So they are exempted to file 1700 annual income tax return. Number 2, exempted. An individual with respect to pure compensation income as defined in Section 32 derive the sources within the Philippines, the income tax on which has been correctly withheld, tax due equals tax withheld under the provision of Section 79 of this code, except for an individual deriving compensation concurrently from 2 or more employers at any time during taxable year shall file or shall be obligated to file personal income tax return. We have third, an individual whose sole income has been subjected to final withholding tax pursuant to Section 57 is also exempted. And lastly, a minimum wage earner as defined in Section 22 of the Tax Code, or an individual who is exempt from income tax pursuant to the provisions of the Tax Code and other laws. So the filing date, the return is filed on or before April 15 each year, covering income for the preceding taxable year. Okay, so that's lesson 1. Let's proceed with the discussion lesson 2. Lesson 2 is for filing up and documentary requirements for income tax EBIR forms. So we have our motivation activity here to find out what are the tax events that will be happening this month of June 2021 based on the tax calendar coming from the bir.gov.ph tax calendar 2021 tax calendar website. So we have here some things that we can, on June 10, for example, submission transcript sheets. We have a submission list of buyer of sugar together with a copy of certificate of advance payment of VAT. So since sugar right now, or sugar industry right now, is charged with value-added tax and made by each of the buyer appearing in the list by Sugar Cooperative. So we have also submission of information return or release of refined sugar by the proprietor or operator of the sugar refinery or mill that will be for the month of May 2021. So submitted sa this June 10, this coming Friday. On monthly report, DST collected the remittance of government agency, and we have filing of excess tax return for cosmetic procedures with monthly summary or cosmetic procedure performed in the month of May 21. So the activity is to list down below income tax transaction this June 2021 that are significant to you and your family. So we proceed with discussion for lesson 2, filing up and documentary requirements of income tax EBIR forms. So BIR form number 1902, application for registration for individual earnings purely compensation income. So filed within 10 days from the date of employment or before the payment of any tax due or before filing of a return or declaration is required. So the documentary requirements are for local employee, any identification issued by an authorized government body. Example, birth certificate, a passport, driver's license, etc. that shows the name, address, birthplace of the applicant, marriage contract if applicable, passport, working permit, or photocopy duly received application for alien employment for Department of Labor and Employment. We have the sources for this form. For the manual filling up of this form, you can download the PDF version of 1902. We have BIR Form 1901, application for registration of self-employed, single proprietor or professional, mixed income individuals, non-resident alien, engaged in trade or business, estate, and trust filing date. On or before commencement of new business or before payment of any tax due. So there are several documentary requirements. This includes any identification issued by authorized government, birth certificate, passport, driver's license, community tax certificate that contains information on name, address, birth date of the applicant. We have photocopy of mayor's business permit, receive application of mayor's business and professional tax receipt, occupational tax receipt issued by LGU. We have third, proof of payment of registration fee with existing TIN or applicable after TIN issuance. Number 4, BIR Form 1906, select an accredited printer. So this is regarding the permit from Mayor BIR Form 1906. We have 5 is final and clear sample of principal receipt of invoices, such as additional documents if final clear sample of principal receipt, 3 invoices. Additional documents, if applicable, special power of attorney, an ID of authorized person in case authorized representative will transact with the Bureau, and franchise documents, certificate of public convenience or common carrier. We have C, photocopy of trust agreement for trust. Letter D, photocopy of death certificate of deceased for estate under judicial settlement. Letter E, certificate of authority, a barangay micro business enterprise registered entity. F, proof of registration permit to operate by BOM, Bureau of Investment, ARM, PEZA, SBA. In case of registration of branch facility types, letter A, documents are needed. In letter A, photocopy of mayor's permit, duly received application for mayor's business permit if the former is still in process with LGU, and the professional tax receipt, occupational tax receipt issued by the LGU or the DTI certificate. Letter B, special power of attorney and ID of authorized person in case authorized representative who will transact with the Bureau if applicable. Letter C, proof of payment of registration. Letter D, BR Form 1906. And number E, final clear sample principal receipts or invoices. Okay, so those are the requirements for 1901, which is the registration form for self-employed, single proprietor, and professionals, mixed income individuals who are engaged in trade, business, estate, and trust. We have the BIR Form 170Q, so quarterly income tax return for individual states and trust. Filing date, we have May 15, August 15, and November 15. First payment is May 15, August 15 is the second, and the last payment is November 15. So the requirements or documentary requirements are: 1. Certificate of creditable tax withheld at source, BIR Form 2307, if applicable. 2. Duly approved tax debit memo, if applicable. 3. Authorization letter, if return is filed by authorized representative. 4. Proof of other payments made, if applicable. And 5. Summary of alpha list of withholding agents of income payment subject to withholding tax at source, if applicable. So we have the guidelines and instruction for BIR Form 1701Q, source, and PDF for manual filing. PDF version is at the website source. We have next is BIR Form 1701A, annual return of individual earnings income individual earning income purely from businesses. So the profession, those undergraduated income tax rates with OST as mode of deduction, or those who opted to avail 8% income tax rate. So these are the options of professions who are or individuals who are earning purely from businesses, which are required to file 1701A annual tax. The filing date is every 15 of each year, covering income for the preceding taxable year. So for 1701, for annual income tax return for individuals, including mixed income earners, the filing for this is the same, April 15 of each year, covering income for the preceding year. The attachments, documentary attachments, however, are 2 attachments: the annual income tax return, mandatory attachments per activity for mixed earners NISIA, and the annual income tax return consolidation of all activities per tax regime. So accomplished only with multiple tax regimes. So if there are several sources of income, these 2 attachments are necessary. So we have Form 1700, lastly, annual income tax return for individual earning pure compensation income, including non-business, non-profession income. So the filing date for this type of form, this will be filed on or before the 15th of each year, covering income for the preceding taxable year. Okay, so we have the website source for this for manual filing or manual filling up of the form. And then these are illustration. The next slide is for illustration or visual presentation of the different income tax forms, six most commonly used. So we have 1901, application for registration. So these are with part 1, taxpayers information. So remember 1901 is to apply for self-employed, single, proprietor, professional, mixed income earners group. So we have also the application for registration 1902. So the same part 1 is taxpayers employee information. 1902 is an application for those individuals or people who are earning purely compensation income. So it's not business, but it's compensation job, career, or position as an employee. We have also the illustration for 1701Q or quarterly. This is for individual, state, and trust who are engaged in business or engaged in business as single proprietor, professional, estate, or trust. So there are 4 types here to be checked. And those who are given choices either to have the 8% IT rate or the graduated rate. So depending on where their income is coming from, they can have the mixed income group, income from their profession or income for their business. So this is coming from for those who have different sources of income, and they pay 3 times a year as scheduled. So we have 1701A, annual income tax, the same, but the difference is only one payment is made every year, that is in every 15th of April. So this is for people who are either a single proprietor or a professional. So tax type, the only 2 choices here, either single proprietor or professional, or both. So you can have elected or opted to have 8% flat rate, or graduated IT rates refers to the tax table for 2021, year 2021. So we proceed with 1701. So these are examples of 1701 form, which two attachments to declare the activities of each mix, the trade activities or the business activities for each year. So example for that is here. Consolidated all activities for tax regime, and when mandatory attachments per activity, these are for those people who are engaged in several income earning activities. So we proceed with 1701, annual income tax return for individuals earning purely compensation income. So we have the illustration 1701. So the computation for either this is what we refer to the 2 options. We could have part 5A, subject to graduated rates, or we could have the flat rate, creditable tax for 8% directly. So it's a choice of the taxpayer. So let's go for the accounting for income tax. So there are 3 basic situations, actual situations that you might encounter in identifying your tax due and tax payments. So here are examples on how to account or how to calculate for tax dues or tax payments. So we have Situation 1. Hilton Company reported pre-tax financial income of 6,200,000 for the current year. Included in other income was 200,000, a tax-exempt interest revenue from government bonds held by the entity. So the income statement included depreciation expense 500,000 for machine with a cost of 3 million, and the income tax return reported 600,000 as depreciation of the machine. The enacted tax rate is 30% or for business tax for the current year and future years. So what is the current tax expense for the current year? So what is required is to calculate for the tax due, or what to pay or how much to pay. So the computation is Helton Company have declared financial income of 6.2 million. The interest revenue on government bonds, the included in other income, this is deducted. You can see the parenthesis 200,000 because it's tax exempt as stated in the situation. Tax exemption for revenue on government bonds, and we have also tax depreciation in excess to financial depreciation. So what happened with depreciation is that the machine was depreciated. The declaration for the machine depreciation is 500,000. Supposed to be the income tax return reported 600,000. So we go with the income tax report of 600,000. We have understated depreciation expense. So therefore, we deducted another 100,000, which is the difference between what's reported and what's in our books. So we reconcile the discrepancy of negative 100,000. Supposed to be it's 600, but however on the books it's only or in the income statement it's only 500,000. So we deduct 100,000. So therefore 6.2 minus 200 minus 6.2 million minus 200,000 minus 100,000, taxable income will be 5.9 million. So the current tax expense is at 30% business tax. This, for example, only times 5.9 million is 1,770,000, which is the tax due. So the answer is the current tax expense based on taxable income. The answer is letter C, which is 1,770,000. So situation 2. Tantrum Company began operations at the beginning of the current year. At the end of the first year of operation, the entity reported 6 million income before income tax in the income statement, but only 5,100,000 taxable income in the tax return. Analysis of the 900,000 difference revealed that 500,000 was a permanent difference and 400,000 was a temporary tax liability difference related to a current asset. So the enacted tax rate for the current year and future year is 30%. The question is, what is the current tax rate or tax due, and what is the total income tax expense to be reported in the income statement for the current year? So the answer for that, to answer for the requirement 1, which is to calculate the tax due, we have current tax expense of 30% times what's the current tax expense. So given that the income statement only have 5.1 million or 5,100,000 taxable income in the tax return here. So therefore, we have 30% times 5.1 million. We have 1,530,000, which is the current tax expense due. Answer is, for situation 1, is letter B. So 1,530,000, which is 30% of the declared taxable income in income statement of 5.1 million. We have the second is what is the total income tax expense to be reported in the income statement for the current year. So how to compute the accounting, and we start with the accounting and financial income, which is 6.0 or 6 million. The permanent difference, which is from the accounting income reported and the primarily income statement, is at 900,000. Out of 900,000, there is a permanent difference of 500,000 and temporary tax liability difference, which is because of a current asset, is 400,000. So what we will do is we have to deduct the permanent difference of 500,000. The accounting financial income subject to tax, it becomes 5.5 million. So total expense, income tax expense, is 30% of that 5.5 million, which is 1,650,000, which is the answer for question 2 is letter C, because the total income tax expense is based on accounting of financial income subject to at 30%, and the permanent difference is deducted with that financial income declared. So situation number 3, last situation. Jayco company is in the first year of operation and reported pre-tax accounting income of 4 million. The entity provided the following information for the first year. So these are accounting information. So we have the income of 4 million and we have mga deductibles. So what the question is, what is the taxable income for this first year of operation? So the computation for that is we have pre-tax accounting income declared as 4 million. We have add the life insurance. So we will calculate first the taxable income. So in order to base the percentage of, or in order to derive the tax payable. So however, the question here is just calculate the taxable income, wherein we will multiply 30% and come up with the tax due or tax payable within the year. So what we do is we add the premium on life insurance, which is taxable. We deduct the excess tax depreciation. So excess, it doesn't count or is tax exempt. Tax exempt interest income, we deduct. Warranty expense, we add warranty expenses. And then actual warranty repairs. So the actual warranty expense minus the actual warranty repairs will be the actual payments for repairs or warranty repairs. We have add doubtful accounts expense, and we have to write off the uncollectible accounts. So we deduct it because it's uncollectible already. For the doubtful account expense is a non-cash allocation of expense. So the cash is still at our hands because it's an allowance still. So we have doubtful accounts expense is tax exempt. And we have rent received in advance, which is we add the rent AXA. Those two will be added. We are adding our our taxable, or this example for this is rent received in advance, it's taxable. Doubtful accounts expense is taxable. Warranty expense is taxable. And premium insurance is taxable. What's our tax exempted or deducted from calculation of tax income? We have excess tax depreciation of 200,000. We have tax exempt interest income of 50,000. We have actual warranty repairs of 30,000, and written off uncollectible accounts 20,000 will be deducted because they are tax exempts and they are not included in tax computation or income tax computation. So we come up with 4.2 million as the taxable income. This will be multiplied by 30% and we will come up with tax due. But however, the question only asked how much is the taxable income for the first year operation, which is the answer is letter A, which is 4.2 million. Okay, so that's it. Actually, that's the coverage for our module 2. So I will be posting the activities, the challenges, or the games that will be included in this module. Good luck, and may may you have the highest scores on the games, and as well as you can calculate the computation challenges for for this taxation subject. So see you next time for our module 3 course module 3, and stay safe everyone, be happy, and stay healthy. God bless us always and forever. Bye bye. Thank you.